Aloha, everyone. Today was an extremely interesting day, as it always is when the Fed releases the minutes. After 2 o'clock, the market started to rally, and it didn't stop until the end of the day. However, this has all the signs of an oversold bounce, but who knows how far it can go. So we have to take preventative measures at hand, but I'm not going to get scared out of my short positions as easily. Volume was extremely lower than the day before on this huge move up. Not only that, but about 9 out of every 10 stocks in the market rallied. That is not a sign of a healthy market coming from overbought conditions. It is a sign of an oversold market that needed to relieve the oversold condition. However, because the move was so strong and because we deal with a Keynesian Fed with insane ideas of how to run this economy, we must pare back some of our small hedges that we have on. So FAZ, SPXU, SRTY, SQQQQ, all of the hedges I have, I'm taking 25% off all of those. I will not have any problem adding those hedges back if we fail here at the 50-day moving average on the Nasdaq or near the highs here of the S&P 500. This market is broken, and there were more signs that it's broken today. I took a long, hard time with my scans. I normally don't go through my scans so slowly. I normally just run through them. But I really wanted to analyze today's action, and I'm coming to the conclusion that if this is a beginning of a new move up, it's going to take a lot more work before we have anything that's really going to be actionable on a heavy percentage basis. It looks dead cat to me. Facebook, the rally was very nice, but I want to show on arithmetic charts. So we still have a lot of work to do. And if we go straight up to new highs, if that just tells me that we're going to probably fail them. So, watch these. I mean, these are the stocks I'm watching. Facebook is one of them. See how it acts. It looks like it's a dead cat. Volume was above average, but nothing convincing. I saw CellG out there, and that's something to watch to see if it's a floor. It very well easily could be because we had an initial breakdown here on the 4th, reversed immediately on Monday, and here on Wednesday we're rallying back above the 10 20-day moving average on a pocket pivot point signal, so it is one to watch. REGN is another, but remember, these stocks have been beaten up so bad that a bounce was bound to happen. You can see by looking at the technical damage, it's pretty extensive, and I'm just not buying it. I'm not going to go ahead and get too excited over this. But other stocks like Pandora, same similar instance. Salesforce.com, same thing. Going to need more time. If we're going to get long these leaders, they're going to have to consolidate for weeks and weeks, and then we'll get long. And to be honest with you, 2014 is an identical carbon copy of 2011 and 2012. Bullshit breakouts, bullshit breakdowns, confusing volume action. Welcome to our QE driven market that makes no sense. If you get upset about it, you need to walk away. I know what it is. It is what it is, and this is an insane time. For the past 6 years, managed futures and trend following firms that have 30, 40, 20, 10-year amazing track records have just floundered the past 6 years. I am no exception. That's why if I was running other people's money, I would have no qualms returning funds like a lot of these guys are doing. This is simply an uninvestable market with just too many crosswinds. But one of the things that we do have going for us, if you are a committed bear, I am not committed to anything ever, is that CNBC, I went to their homepage after the market closed. I was gone for the final hour, and every single article on that homepage is bullish. Every single one. There wasn't one single bearish article on CNBC. That tells me that the big boys want you to buy this dip, need you to buy this dip. I really don't think they have your best interest in mind. They didn't at the top in 2007. They didn't at the 2000 top. I doubt they do now. So I found it interesting that all the articles were bullish on their homepage. That, along with the lacking volume and the leadership that continued to be in energy stocks and utilities today and real estate investment trucks. The only one that was kind of odd that showed up was media stocks. You got CTCT, CLMS, CMLS, excuse me. And then you can see NTN, and at one point Crown was doing good today, but media stocks showed up, and I guess that means that people are, if you can't spend money, you can't afford to go out, you stay home and watch TV. That's about the only thing I have. And another thing that should be about the 9 out of 10 stocks up to date, my short scans were completely empty. We're talking 6 was in one, 11 was in another that normally return over 20 each. So once again, odd action overall today. But there's other things that FXA, FXI. While our market isn't doing too good on the short term, there's a lot of relative strength in some other foreign countries. We'll see if that continues. But Australia's dollar index looks good, and there's just some strength out there. I saw in India stocks today. There's India hitting new highs in their market. So there are areas that are moving up in the futures markets, not necessarily in our stock market. About the normal typical thing in a market like that is me not taking trades and then having them come to bite my ass. Last night, the only actionable signal that I got was in Rare, Ultragenyx Pharmaceutical Incorporated. I decided to pass on that signal because of the market environment we are in, and Murphy's Law, the goddamn thing rallied 11% today alone. So it is just a typical action. You can be mad at it, or you can be like, yeah, that's what we got. And indeed, that is what we got. So since Rare did so well today, and I did not take that nice signal yesterday, I did get an okay signal today, and I guess since I'm going to go ahead and take it, I assume it's only going to fail. So buyer beware, caveat emptor, if you do decide to make this trade. But CVM is breaking out above this short-term downtrend line. You can take a downtrend line connecting this high with this high, and it goes across the price range. That's a breakout. Volume is heavier than the previous 4 days. It's not producing a pocket pivot point signal yet, thanks to the volume back here on the 26th. But still, it looks like it's a good breakout. We got a lot of good volume and bop in there. The only thing is that TSV and MACD is trending lower, so if it fails, won't be shocked. It's only going to be 1% of my account capital, though. Going to keep every trade here very, very minimal. If I would have taken Rare yesterday, it would have been only 1%. But bottom line is, it looks like it's a dead cat bounce. I'm going to need to see more confirmation before I get scared out of my short positions. And even if this market does rally to a new high, we are near the end, folks. There's never been a higher level of margin debt ever in the stock market, ever. Bearishness is at all-time lows, even lower than it was before the 1987 stock market crash. Bullishness is at the highest it's been since the 1990s, and VIX is extremely low, with the VIX again cratering today down to below 14, dropping 7%. When everybody's bullish out there, I'm not. And right now it seems like everyone is bullish. Everybody wants us to buy the dip. I don't see it. I'm going to need to see more work. So don't feel like you have to go out and buy stocks here. You can let the market prove itself to you. My best advice is I would completely walk away from this market. If you don't feel confident here, if you're getting chopped up a la 2011 and 2012, just walk away. Something is extremely wrong. Look at these big red volume bars above the 50-day volume average this year. How many green volume bars do you see above the 50-day volume average? How can that hold? It can't, especially with the rotation in leadership. We're going into May. The famous market axiom is sell in May and go away. I find it hard to believe it's going to be anything different this time around. And even if we do get a summer rally, you're going to get it on no volume, which leads you up to a potential market downturn in September, October. And as we all know, the market historically loves to crash in either March or October. We're not in March, and October's coming up. Any kind of rally into October, I just don't see how it's bullish. 6 years deep into a non-stop QE-led uptrend without a 20% pullback. So don't worry about today. It's just one day. Take it for what it is.